I think we are good to go. Alright. Let me maximize that. Sorry, bear with me a second. Okay, perfect. Well, good morning, everybody. Or afternoon, evening. We're all over the world. I'll tell you what, I appreciate y'all joining today. I don't intend on this being overly long. I'm shooting for like 30, 45 minutes. We can make this as interactive as y'all want it to be. I really don't have a script that I'm going off of. I mean, I wrote down a couple of things on the invite that we did, or I sent out for the announcement, and this is kind of what I want to discuss. Basically, I've seen a lot in the chat. I'm getting a lot of DMs, and just seeing a lot of the same issues over and over and over again. So I just wanted to have a Sunday chat and talk about some stuff that I see that's holding a lot of people back. And it's really simple at the core of it. You just have to be aware of it and decide to make the change, right? So let's just kind of dive right into it. Basically, what I've seen over the past couple of weeks, people have a lot of fear with their trading. They're second guessing setups, they're second guessing themselves, they're just trading with a lot of fear. And I want to ask, and if you can write it in the comments or whatever, do you understand what drives fear into a trader? Why they have fear? And I'll give it a second for people to type in. Okay, Eden said fear of being wrong. Kraken said loss of money, ego, not understanding your model by Rude Dog. Fear of losing, not confidence in model, losing an account. So, Rude Dog hit on it, not understanding your model. What I know, a lot of people have done their back testing, right? They talk about back testing, they've done it, but I don't think they've truly done it in a way, or not that they've done it in a way, but I don't think they've analyzed and they understand what that data gives them. Okay? So, if you go through your back testing, and let's say you have a 70% win rate on your back testing. Let's say we're trading time-based change in the state of delivery, right? We're trading hourly opens from the New York Open until New York close. So you're trading the New York session, and all you trade is time-based change in state of delivery, where we have a breaker that overlaps with a key opening time. We have one of the three assets raids the prior hour high or low, and then we get the breaker in the opposing direction, and you take it. Okay? So let's say we backtest that, and we have 300 examples over the past 2 years. And our data comes out, and it says we have a 70% win rate when we take this trade. Guaranteed, it hits 2 standard deviations 70% of the time. So if you have that data, and then that's going to be your model that you trade, tomorrow on Monday, when the 10 o'clock candle opens, and it's your first candle in the New York session, and you're sitting there, and the 10 o'clock open overlaps with the bullish breaker, NQ just raids the 9 o'clock low, ES does not, YM does not, and you're sitting here and you're thinking, oh my goodness, everybody all weekend has talked about how we're going to go down today. I can't take this trade because I'm bearish. I'm sitting here thinking I'm bearish because everybody's talked about the huge gap downs we're going to have, right? But when your setup shows that you've back tested and you have 300 examples that say if you take this, it statistically has an edge of 70% chance out of 70 wins out of 100. You take the trade and you let the probabilities play out. But we don't trust our data, and we try to get in our head and try to outthink the market. Why? Did you outthink the market when you were doing your back testing? No, you didn't. You sat there, you saw a 10 o'clock open with a breaker, one asset rated the 9 o'clock low or high, and you took the breaker. And then you got a 70% win rate. So why do you fear it when we're live in the market? Why do you forget all the work that you put in? Now, I can completely understand if some people say they've done the work and they haven't, because that's the other side of this. If you really haven't put the work in and you haven't done your back testing, you don't fully trust your model, you will have that fear. You will have that uncertainty. If you're just relying on Tenny saying, oh, this setup has a 80% win rate, you'll never fully trust it, right? Because you didn't do it. You do not understand the data. Or if you listen to me and I say, hey, you know what? I got a 70% win rate. This is what I look for. I look for liquidity rated from prior session. I look for SMT. I look for breaker. I got a 70% win rate. And you just blindly trust me. Yes, you're going to have hesitation. Yes, you're going to have fear. Yes, you're not going to trust the model. So, one of two things. You either have to do the back testing, make sure you collect your data, and you understand your data. Or two, if you have done it, and I don't know if you're in here, Manav, but I'm going to call you out. I know you have done more back testing than so many people in here. But yet you don't trust your data. Why? Why? Trust your data. That's what data is. All right, let me look at the comments real fast. And sorry if I don't see something. I'm trying to make this as short, sweet as possible. FOMO, not enough experience. Okay, Jay Powell posted something. He said, after 2 or 3 losses, my confidence takes a massive hit, despite having the data to show that it's pretty rare. Okay, so let me see. I think he also posted his data. So he's got 620 setups, 431 wins. That's a 69.36 win rate. So he is winning, on average, 69 trades out of 100. So when we're trading, we have to let the probabilities play out, right? And that goes into the second topic. We have to let the probabilities play out. But as traders who are not profitable or even break even, they don't understand the true meaning of probability. Meaning, they think that if I take this one trade, I've got a 70% win rate, it's got to be a winner, right? Or they take that second trade. You know what? I lost my first trade, so I have a 70% win rate. The second one has to be a winner. They take the third one. My prior 2 trades were losers, so this one definitely has to be a winner. So now I'm going to size up. Well, that's another loser. Probabilities work out over large sample sizes. 10 trades is not enough to understand probabilities or your edge. 20 trades is not enough. 100 trades, you're starting to get there, but 1,000 trades is better. 10,000 trades is better. We can take a quarter right now. I can get a quarter with heads and tails, and we know the statistical probabilities over the long haul. If we flip that quarter 10,000 times, we're going to have right at a 50% that it comes up heads, 50% that it comes up tails, right? But I can take this quarter right now, and I can ask you, is this going to be heads or tails? And we don't know, right? That's the same with the trade. We don't know if it's going to be a winner or if it's going to be a loser. I flip the quarter. It comes up heads. Okay, that's a heads. Now we have our next trade, or we have the next quarter. And I say, okay, is this going to be heads or tails? And you can be like, well, I know 50% chance it's got to be heads or tails. So the last one was heads, so this one's got to be tails. I flip the quarter. It's heads again. You took another trade. It's a losing trade. Okay, that's 2 trades. That's 2 quarter flips that came up heads. The third one, I flip it again. It comes up heads again. In the short term, the results are going to be random. But if you statistically have an edge, which our model, it does have an edge, and you let the probabilities play out long term, and you take every single setup that shows your model, your edge is going to play out over the long term. Just like flipping that quarter, it might get 4 or 5 heads in a row, but eventually it's going to even out. So, if you understand your data and you understand probabilities, which you truly have to understand what probabilities are. The only thing that you can control, and the only thing that you can dictate the outcome of, if your model shows, do you push the button or not? Or do you sit here and you think, I don't know if this is going to be a winner or a loser, and you skip on it? Because I can tell you, I think last month I probably took 100 trades, maybe 120. I had zero clue on all those trades if one was going to be a winner or a loser. But what we start to do as traders, we either do what Jay Powell said, and we get, hey, we have 1 loss, 2 loss, now we have a 3rd loss. And you know what, this 4th one shows, and that's my model, it's perfect. We took the session liquidity, we got the SMT. I don't know about this one. Luck's not on my side. I'm not trading well. And sure enough, we pass on it, and this one ends up being a massive winner. And it would have taken care of the previous 3 losses. So now we're pissed off, we're upset at ourselves. Why don't I just follow my model? Okay, so the next trade comes up. And you're like, okay, I didn't take that last one. It was a winner. My model's showing again, so I'm going to take this one, and it becomes a loser. And now, you've had 4 losers in a row, and you missed the winner. And you start saying, well, it's just on me. I'm so unlucky. I'm not a good trader. I need to do more back testing. I need to do... No, you don't. You need to let the probabilities and your edge play out. Does anybody in here... y'all ever been to a casino? And I'm going to give it a minute. Anybody been to a casino? I love casinos. I love to gamble. I love to go have fun. All right, so a casino, right? If you can think about at a casino, they have an edge. Every game that they have out there, they have over a 50% chance of winning. So they might have some games where they have a 65% chance that the casino's going to win. They might have some games that only have a 50.5% chance that the casino's going to win. Do you think that, let's say if I go into the casino this afternoon and I go sit down at a slot machine and I hit the jackpot and I win $1.5 million, do you think that the casino owner or the group that owns the casino is going to be like, oh, we just took a loss. We took a $1.5 million loss. We need to look at our business model. We need to trade or change our trading plan. Something's wrong. Something's wrong. No, they don't. Their backtesting shows they have an edge. And probabilities over the long haul will play out in their favor. They don't care that they took $1.5 million loss, because they know over the next 100 people that play that slot machine, they're going to bring in $2 million compared to they paid out $1.5 million. So it's the same thing with trading. If you can think like a casino and just think about the edge that you're back testing, whether if you have a 40% win rate, it doesn't matter. Whatever your back testing shows, if you have the data that shows it's profitable, you have to let the probabilities play out. And you can't be concerned on this first trade Monday morning or Sunday night, whenever you're going to trade. You can't be concerned on that second trade, on that third trade, on that fourth trade. What you need to be concerned with is, hey, this is my back testing, this is my data. Every time I see this setup, I have to take it. I'm going to force myself to take it. And I'm going to let go of the outcome, because I cannot control if this trade that I push the button on is a winner or a loser. I can't control the second one. I can't control the third one. But I can guarantee you at the end of the month, if you really have back tested your model and you take every trade that sets up to that model, if it has an edge, it is going to be profitable in the long term. I know Alvaro is in here. He shared his data, right? I think he had a 20% win rate. 20% win rate. The Joker still made money last month. He had a horrible month and he still made money. But he let his model play out. And now you want to know what happens this month? Because he knows that even on one of his worst months, he's still going to be profitable. This month, he's going to be able to trade with so much freedom, so much clarity, and he's just going to see his setup, he's going to take it. And at the end of the month, I hope he has a much better win rate this month. Imagine if he got up, and I'm trying to think, I think he made like $950 on that one account that he shared with a 20% win rate. What if he has a 50% win rate this month? This Joker, he just made his mortgage payment, right? On one account. And all he didn't focus on the money. He's not focusing on anything except he sees his model, he takes his model. And that's what you need to do. That's what everybody needs to do. That's the difference between a trader that is red consistently and a trader that's break even to those traders that are now consistently profitable. We're always going to have emotions with trading. Always. Look, I have emotions when I trade, but I don't let them dictate my trades. You can't. You have to trust your data. And if you don't have the data, you need to put the work in to do it so you can trust it. Excuse me. All right, let me catch up on this. Alright, CS just wrote, if your model is fully 100% mechanical, then taking every setup seems logical. But at least for me, it is very difficult to obtain a fully robotic model. There are so many intricacies that either increase or decrease the probabilities. And when it comes down to it, there is still a human element deciding if the trade is worth the risk or not. How should one go about this? Okay, so CS, if you've done your back testing, right? Whether if it's continuation plays, if it's session liquidity raids, and we take reversals, time-based changes in state delivery, you know what those intricacies are, and you know what those the details of that model should be. So if you have the data on it, then you need to take it every single time. Now, yes, you are human. Are you going to make mistakes? Are you going to interpret the data incorrectly? Maybe I'm going to trade tomorrow session liquidity raids, and I think that NQ took London high when in reality I was looking at the wrong candle and it didn't. Okay, that's a mess up. That's human error. That's on me. But if I sit here and I see all my criteria met that I have my back testing done on, and I don't take the trade, that's on me. That's bad, right? So if you're trading continuation plays and you know that you need a 15-minute BISI, SMT, you need a breaker here, you need it during this time, and that setup shows and you don't take the trade, that's on you. That's the only part that you can mess up a mechanical model, because everything that we trade within this group, I would say 95% of it is purely mechanical. Purely. All right, let's see. Do we all? Anna K says, "Do we all trade tinny model in this group?" I would say 90% of traders in here do. Yes, Anna. All right, I'm gonna jump back into this. Let me look at a few notes that I have. Okay, something that I wanted to touch on too. And I want to ask this question. If you have a 2-to-1 risk reward ratio, meaning that if every trade you take, you risk $1, and, excuse me, you risk $1 and your reward is $2, do you know what your win rate has to be to make money? Boom. There we go. I see two people roughly got it right there. 34 and 33%. I was going to say 35% just to cover the commission so you can break even. But look, if you were getting a 2-to-1 risk reward, you only have to be right 33, 34, 35% of the time to be a break-even trader. How many of you know your model has a greater edge than that? But yet, you still fear it. And this comes down to like the fifth category here that I want to talk about. Why you have to let your winning trades do the heavy lifting. Where most traders that I see that are not profitable yet, consistently profitable, one, that they don't think in probabilities and the edge that they have. So, I mean, that's one thing. They live and die by this next trade. And that is, you're putting too much pressure on yourself. Because, again, if I take a trade tomorrow morning, I don't know if it's going to be a winner or a loser. But I do know over the next 100, I'm going to have a huge edge, and I'm going to make money. Okay? So that's the first thing. They live or die by. The second thing is, let's say tomorrow I take a trade and I take a loser. Okay. Then I take a second trade and I take a loser. Okay. The third trade, oh, this baby's running in my favor. Oh my goodness. I'm up 2R on this trade. 2 standard deviations. Well, my model and my back testing, I have to take 25 to about 40% off at 2 standard deviations. So if I have 4 contracts on, my model says I only take 1 contract off at -2. Where most traders that are not consistently profitable, they will change their model. And they're going to be like, okay, you know what? I just took 2 losers. Let me go ahead. I'm going to take half off here, and that's going to cover my losers. So I'm going to take half off, and then I'm going to get stopped out. It's going to come back to break even and tag me out. Okay, now, and my math might be off here, but be like, okay, we're roughly break even now on these 3 trades. So I'll take the 4th trade, and this 4th trade I'm going to follow my model. Okay, so the 4th trade starts to go on. Hey, I take a full loss. Well, shit. Now I'm down, I'm down 1R, 1.5R, whatever it is. So the fifth trade comes up. And you know what? It starts to run, but I'm like, hey, I'm gonna go ahead. I'm gonna take the full thing off at -2. It gets down to -2, I take it off, and then I see that thing run to -4 and plus. And now I'm sitting here thinking, well, why didn't I let the winner run? I took it off at 2R, and now I'm basically break even on these 5 or 6 trades when a real trader who knows their edge, knows their probabilities, is going to let that trade run and take 25% off at their level that they said. They're going to take the other 40 or 50% off at the level that they said. And then they're going to let their runners run, and they're going to see that one win might have captured them 5R. So that would have taken care of 5 losers. That's the difference that you see with Tenney, right? This Joker is look, he's given us all a fantastic model. He's given us all his data, his back testing, everything. But why is he a trader that's making millions of dollars, tens of thousands of dollars a day, and we have some traders in our group that are losing eval accounts every single day? And it's the same model. Yes, Tenney is a little bit better at reading price, right? But at the end of the day, his checklist is the same. Session liquidity rated. Do we have SMT on 15 minutes or higher? Do we have a breaker at a key time? Do I take the trade? He does. Then when he gets into it, does he let his, at that first partial level, is he taking more than 50% off? No, not usually. He's taking anywhere from 20 to 30% off. And then at that next partial level, is he taking the rest off? Nope. He's taking another 30, 40, 50% off, and he's going to leave runners. And when he has a massive winner, it's a massive winner. How many of y'all last week or last month had a massive winner? Had something over 4R? I'm going to say not many. Not many. Bradley, you had one? Yeah. Look, my stats last month were absolutely atrocious. I was at 40% win rate. That's one of the lowest I've had in 12 months probably. But the account that I shared still made really, really good money. It's more than most people make in a month at a good career. And it wasn't because of luck. It wasn't because of anything. It was because you have a model. I know my data. I know when I'm in a winning trade, I have to follow the same protocol that I would have if I've won my last 15 trades in a row. Even if I've lost my last 15 in a row, I still have to follow my data, my back testing, those results. Because that's what's going to lead us through the good times and the bad times. Let's flip through the notes. Let me see. Is there anything up here? Let's see. Bray said Tenney has the ability to remove any possible emotional slippage. He does. But I'll tell you, he's still human. He still has those emotions. Look, there's still trades he's in and he's fearful. He's got those urges to, hey, I need to take this off now. I'm up this amount of money. I need to take it off. But he relies back to his data. He knows he's got to follow the model. He's got to follow his information that he has. That's all he can control. We can't control if we get a V bounce from -3 standard deviation. Can't control it. But what we can control is taking your partial, moving your stop to break even, and even if you give back tens of thousands of dollars on that trade, you followed your model. Let's see. So, and I think I touched on it earlier, but let's go to number 4, right? Not hesitating when your model shows. This is another thing that I get a lot of DMs on, and it's like, how can I get over this? How can I not hesitate when I see the model? And Tinny talked about it on his last stream, I think the mental checklist. You have your checklist of your model. So for me, my basic model is liquidity rated from a prior session. Check. NQ runs lunch high. ES doesn't, YM doesn't. Okay, there's my liquidity rated. Do we have SMT? Check. NQ rated it. They didn't. So there it is. Okay, a breaker shows and going in the opposing direction. Okay, is the time right? Well, check. So from there, what do? You take the trade. If your model is checked off, you take the trade. You don't sit here and question and think, oh my goodness, we're up 500 points on the day. We can't continue to go up another 500. No, it doesn't matter. We got to get out of our own way. We have to stop thinking. Because we don't know what NASDAQ's going to do in 10 minutes. All we know is what our data is, what our model is, and we have to let the probabilities play out. So if you have a checklist and you can check everything off that checklist, you push the damn button. You don't sit here and try to outsmart the market. That's the difference from consistently profitable traders from the ones that are consistently not profitable. They take the trade. They don't let their emotions stop them. And I want to jump into something real fast. And I want you to think about this. I talk about this a lot with the people that I mentor. And I get frustrated with them sometimes. And it's all out of love. But I get frustrated with them sometimes because they're like, I want to make this change, I want to make this change, I want to do this change, blah, blah, blah. It's the same change over and over and over again. And I'm like, why don't you just do it? And they're like, I can't. Well, look, the shit that you're doing right now hasn't been working for the past year. So why can't you just change? What you're doing is not working. So I say that if you're at a break-even stage right now, or you're still losing evals, you can't pass them, you have to change what you're doing. The reason 90 to 95% of traders fail is because they can't change. They think that they're smarter than the market. They think that they know what NQ is going to do Monday morning when it opens. Right? No. The winning traders, they know what their data is, they know what their edge is, and they know their probabilities, and they have to let them play out. So they take that trade. And, you know, y'all were in a trade on Friday. I think it was a 12:30 reversal long. And Tinny was like, oh, this is going longer. You know, I'm long. I want prior high week or whatever it was, prior monthly high. I think Hey Shu was like, nope, we're going short. Right? Everything said short. I looked at the chart while I'm driving. I'm like, yeah, short's pretty dadgum good. But the thing is, Tinny's model showed at 12:30 SMR, it showed he had SMT. He had the liquidity rated that he needed. He had his setup, and he took the trade without question. And he said, you know what? I hope Hey Shu's wrong. I hope that I take him, his stop. But we're going to let the trade play out, right? It could lose. And that's what he did. And it lost. That's one out of, he's got a 70% win rate. 80% win rate. That's one trade that lost out of, the next 100. He'll take that same trade again, even if he knows it's going to be a loser. Tomorrow, he's going to take the same trade because he knows his model over time is going to play out. And he has to push that button. And that's what you have to do. There's no need for FOMO. There's none of that. If you truly understand your model, fear should not stop you from pushing the button, and you should never FOMO into a trade. The reason you FOMO into trades is because you don't truly understand how much your model repeats day in and day out. And you don't trust it. All right, let me look at these questions here.
Rude Dog says he's noticed that when Tinny sees his model, he slams it every day, all day, according to him. That's it. That's all he can do. He lets the probabilities and the edge play out. That's it. Kraken says the trader's job when the model shows itself, hit the button. That's the only thing that we can control as a trader. That is it. All we can control. If our model shows, we push the button. J-Pal, I'm not trying to drag you through anything right now, brother. Alright, let's see. Colin wrote, there are trades that are within your model that I've seen you pass on due to it being into a higher time frame FVG or an overlapping breaker, or forming SMT while it creates, etc. This is what I was referring to before as the human element being subjective. Are you saying your model is 100% mechanical? No, my model is not 100% mechanical. If it was, then there wouldn't ever be trades where you say you're going to pass on it because you would more black and white either within the model or not. Does it make... Yeah, it absolutely makes sense. And Colin, I'll tell you, I'm not a perfect trader. There are... And look, I'll give you an example. On Friday, at 11 o'clock, we had the 11 o'clock candle open, right? We created what I saw was going to become a breaker roughly at about that 11:30 SMR. I was waiting on us to hit that higher time frame breaker to reject and go to the downside. ES did. It took liquidity. We had SMT there. My model was there. Now granted, I had to step away from the desk so I couldn't put the trade on. But if I'm being completely honest with you, I think I'm probably going to skip that 11 o'clock short because it didn't quite hit everything that I wanted. So would that have been a bias of mine? Yes. Is that incorrect thinking? Absolutely. I need to take that trade 1,000% of the time. So I'm not a perfect trader. We strive to get there. Now, others can also say we had conflicting information. YM had rated the prior hour low, while ES and NQ had rated the prior hour high. So if that's part of your data, you can skip it, right? If it's unclear. But yes, you need to strive for 100% of the time. If your model shows, take it. Take it. Excuse me. Let me see. The last thing that I really wanted to go over, and I don't know if y'all do this or not. I don't know if y'all show, or if you write down what your goals are every month, right? But, hang on. I would venture to say that my goals are different than what most people's goals are in here. Hang on one second. My son's got a question. I'm going to say that my goals are different than I'd say probably 90% of the traders that are in our group. Give me 1 second here and I'm going to pull them over. And let's talk about why my goals are a little bit different than what the group is. So February trading goals. Consistency across all accounts. And I'm going to tell you, I'll tell you a psychological thing that I've noticed about me that I've got to get over. And it deals with this first one. Consistency across accounts. Every trade setup must be executed across all accounts. No selectively choosing which setups to trade. And what I mean by that, before I got into the prop space, I traded a cash account. And I've traded a fairly large cash account. Well, when I started getting a lot of funded accounts, I put that cash account on the back burner. Now, I've noticed I'm trading my cash account more along with my funded accounts, but I've become much more conservative with my cash account than I am with my funded accounts. And that's me being selective and thinking that I know more than the market does, and I know which trades are going to be winners and which trades are going to be losers. So that is the absolute wrong way to think about. So, February, my goal is every trade I take, I have to take it across all accounts. I can't sit here and be like, oh, this is an A plus setup, so I'm going to trade it with my cash account and my fundeds. And, if it wins or loses, that's fine. And the second trade comes up, and I'm like, oh, you know what? This is a B plus. I'm not going to trade my cash account. I'm just going to trade my fundeds. I don't know that. The only thing that I do know is session liquidity, check. 15-minute SMT or higher, check. Breaker at a key time, check. Push the button, take it on all accounts. That's all I can control, right? So that's a goal for February. Next goal is commitment to execution. If my model signals a trade and I am at my desk, I must take it, no hesitation. Again, it goes back to that, what Colin just asked me and what I talked about with yesterday. If my model shows, I take the trade. No hesitation. We slam it like Tenny says, right? Okay, next one is trust the process. I have to allow the edge of my model to play out over the month. The probabilities are in my favor. I'm reminding myself on my goals, my edge will win out over the long term of the probabilities for the entire month. The last thing that I want to focus on is long-term focus. I have to avoid fixating on short-term results. I have to stay disciplined, and I have to journal every trade for review and improvement. So I want to ask y'all, of my goals right here for February, what's one thing that you notice that I do not talk on? There you go, money, P&L. Why is that not a goal of mine? It's because I can't control it. Like Colin just said, all performance-based goals and not outcome-based goals. I cannot control what that trade on Monday morning, February 3rd, the first trading day of February, I can't control if it's going to be a winner or a loser. I can't control the second one or the third one. But I can control if I take a trade on every one of my accounts. I can control if my model signals a trade and I am sitting here to trade. I can take it without hesitation. I can control allowing my model to play out over the month and letting the probabilities be in my favor. And I can focus on not letting one trade dictate the rest of them. And I can journal every single trade as soon as I'm done with it. I can control all of that. And next month, I might make $100,000. Or I might lose $50,000. I don't know. But what I do know is if I can check all these goals off at the end of the month, I won. And as long as I can stay fluid with capital, long term I'm going to make money, right? I know it because I've put in the work. I've put in the back testing. I know the data. And hell, I know from live execution last month, even with a 40% win rate, I'm wildly successful. So we're going to trust it. And that's what I challenge each and every one of y'all to do. So I'm going to put something into the chat. Hang on one second. So I've got a group that I work with really closely. Really closely. And a lot of them are in this group. A lot of them are fantastic traders, and you know what? Some of them aren't where they want to be. Actually, all of them aren't where they want to be yet, right? And I've challenged them this month. And I'm going to paste my challenge right here. And then I'm going to paste a link. And you know what? I'm going to paste it on this video as well. Hang on. I don't know if I can do it, but I'll read it out loud. Hang on. We're going to have to make this small. All right, that's not going to work. Sorry. But here, I'll read it out. So I wrote, here's the assignment for next week. I'm going to go ahead and say I don't think any of you will fully do it. Yes, I'm calling you out. Do not trade your cash accounts unless you want to, and follow these parameters for the next 20 trades. You enter a trade and you take 25 to 40% off at -2, and then the rest fully off at 4 standard deviations. Only way we take it off before is if a clear opposing breaker shows, and I don't have this in here, but told them, if a clear and opposing breaker shows, and you take that next trade. On the Excel sheet, and I'll post that in a minute, you will post a hyperlink of the trade with the targets when you enter and a picture of the executions when you finish. You want to get out of this break even or slightly red phase? Do the work I'm asking, or stay stagnant for the rest of this first half of this year. It's your choice. Give me these 20 trades on your evals that you are not passing right now, and let's see what it looks like. What you're doing now is not working. So let's do something very different. This comes from a place of love as always. Godspeed. So let me post the link now to the simple Excel sheet. And I'm going to challenge all of y'all. Do this. Try it. The worst thing that can happen, you figure out that, hey, your model might be wrong. You might need to change something to your model. But I can tell you what I think will happen. You'll start to realize that when you fully trust and you let your model play out, how profitable you can become. And once we get out of our own way, then we can become the traders that we want to be. Oh, best. Thanks, brother. Alright. We've been going for about 45 minutes. This is all I've got for y'all. All I wanted to talk about. So, does anybody want to ask questions? Do you want to talk about anything? Type it in chat. Ask to speak. Let's open it up. Alvaros, I want to thank you, buddy. I want to thank you for sharing your stats, because it really, seeing those really motivated me to have this conversation with people. Because I mean, it just shows what is needed in having profitable trading. So I appreciate you. Dan, you asked, have I written my goals down somewhere so I can see them every day? Yeah, I got a post-it note, and I look at. Rude Dog, thanks for your time, buddy. And Bray, I had you in mind, brother. I had you in mind when I was thinking about this as well. We got a lot of really great traders in this group and that I've talked with, and even, from TOTK, all of it. Great traders. We have to get out of our own way, and we have to trust the math behind everything. All right, I'll give another minute or two to see if there's any questions or. John, thanks for joining, brother. And John, you know what? You're another one that I was thinking about, because I see you move to break even a lot, and you get stopped out, and then it runs, because you're letting your emotions get to you. Colin, I know you can make changes. And I know you can be disciplined. So go for it. And look, if y'all take me up on this challenge, and you get your Excel sheets, you want to share it with me, share it with me. I'll help you the best I can. I'll, I'll give you hard truth. Look, you effed up. Why'd you do this? Look at what would have happened. All right, ladies and gentlemen, I tell you what, we've almost been going an hour. Um, I think we're gonna call it here. I just want to wish y'all good luck for February. There are some absolute beasts in this room that we get to trade with every day. There's quiet ones. There's loud ones. There's ones you've got no clue of. And if you're not there yet, you will be. But you got to get out of your own way. Be grateful of the challenge that you have ahead of you this month. Um, be grateful every day that you get to go to these charts and you get to try to be better. Um, I know the amazing traders that each and every one of you have inside of you. And I can't wait until you understand it and it all comes back to trusting your data that you've collected. And if you haven't collected it, you got to go collect it. And then letting those probabilities play out and getting out of your own way. And if you do that, you're going to transform your trading career and you'll become an unstoppable force. So I appreciate each and every one of you. I am grateful every day that I get to interact with y'all. Y'all, whether if you know it or not, you make me a better trader. You make me a better person. And I'm just so grateful for every one of y'all. And I hope you enjoy the rest of your Sunday. Rest up because February is going to be, it's going to be fire. And y'all have a great day. Thank y'all.